Welcome to the MasterMIND Club, your ultimate gateway into the world of Bitcoin mining. Whether you're just starting out or looking to scale your operations, our vibrant community of like-minded enthusiasts is here to support you every step of the way. Join us for weekly sessions led by industry pros, where you'll exchange ideas, brainstorm strategies, and stay motivated on your mining journey. From heat management to site optimization, our monthly deep dives cover the technical know-how you need to succeed. And with access to our entire back catalog, you'll never miss a beat. But that's not all. Our members enjoy exclusive one-on-one sessions with veteran miners, plus direct access to special pre-sales and insider opportunities at Bitcoin Mining World. Ready to take your mining to the next level? Join the MasterMIND Club today and secure your spot in the future of Bitcoin mining. Visit bitcoinminingworld.com or scan the QR code now. And now back to the show.
Welcome to MasterMIND. I'm your host, Joel Thomas, and today we're going to dive into the world of Bitcoin custody, treasury, lending with Matt Cohen from Unchained. And this is a really critical part of a Bitcoin miner's life that definitely doesn't get enough attention. So I'm super excited to dive into this with you. And before we dive in here, I just want to mention we've got a great deal happening here on 60 new ant boxes that are available. So if you're interested in this offer, and it's a great time to buy given the price of Bitcoin being low and get your CapEx going here, hit up JR Rockefeller. You can pop the QR code on screen and he can definitely get you tapped in here and take a look at that. So with all that said, Matt, welcome to MasterMIND. Thank you so much for coming on today. How you doing?
I'm doing well, Joel. Thank you for having me. It's a real pleasure to be here and excited to be here on the Good Friday. So.
Yes, it is a holiday. So for everybody watching today, thank you for coming out here and spending your time with us, Bitcoin nerds. And so before we dive in, you want to maybe give our listeners, or our viewers, I should say, a little bit of background on yourself and how you ended up in Bitcoin, and then maybe tell us about Unchained and what you guys do.
Yeah, absolutely. So I myself, I look young and I am young. I'm 28 years old, but I've been in Bitcoin for about a decade now. I got interested in Bitcoin when I was back in college. I went to Texas A&M University for any Aggies, gig them out there. But yeah, I went to A&M for economics. While I was there, I had some really good buddies who were leaning in my ear, talking about the differences between Keynesian and Austrian economics. And 2017 era, around that time, I kind of transitioned to not selling my soul to the financial system and went full bore into Bitcoin and joined Unchained about 2 years ago. So it's been in the industry for about a little bit more than that, but been a Bitcoiner for a little bit longer. So
that's awesome. So tell us about Unchained. What is it you guys do, and how does that apply to the world of Bitcoin miners?
Yeah, that's a great question. Unchained is, originally started back in 2016 as a Bitcoin-backed loan company. And we all kind of know how important, Bitcoin-backed loans are to the Bitcoin miner's life. But we really pioneered, I would say, the Bitcoin backed loan model initially with the no re-up application model, and transparency and collateral, and being able to, view where the collateral is on chain. And we can, dive in a little bit more into the details later. But, that really kind of grew into a more of a broader offering where we're able to, kind of pair, I would say, the foundation of no counterparty risk and, focus on no single points of failures alongside, access to a lot of the traditional financial services that, a lot of people have become accustomed to over the last, however long the fiat system's been running. So we try to marry, convenience, but still, rely on sovereignty as our foundation. And so, the kind of pillars of how we run our organization are, Bitcoin as a common purpose, right? We're a Bitcoin only company. We focus on, what we do best and what we believe is the future. And then, we pair that with low time preference, building for that long-term future, as well as, owning everything along the way. We have a real culture of celebrating ownership and focusing on, what we do and own every single day. So it's a great place to work, live. I feel like I spend most of my time there, but yeah, it's awesome to be here.
Well, living in Bitcoin is definitely the only way to live, I think, for a lot of us. So it's great. I think all of the wonderful companies and services out there that people are offering. So let's talk about custody here for a bit. I think this is a really important topic, and it's an important one for miners because obviously the amount of custody increases every single day if you're a miner. Depending on how many times you have, if you're pool mining, you know, your Bitcoin goes from your pool to your wallet. So, I mean, for some of us, I think it's daily or even hourly, we're getting deposits. And then there's other people where, depending on the scale you're mining, it might be something that happens once or twice a week. So there's a lot of self-custody happening in mining. So why does Unchained focus so much on single points of failure and counterparty risk? And why does that matter, especially for miners? What do you think?
Yeah. So, I mean, that's a good question. And you know, I certainly think, you know, with miners in the world that, you know, most people live in, where you're worried about infrastructure costs, you're worrying about servicing the sites, worrying about power costs, you're worrying about financing, you're worrying about employees and all this other stuff. I think custody can oftentimes kind of fly underneath the radar because, you know, really the kind of the goal is to keep the operation running. And so I tend to, you know, look at this as more of a first principles approach, right? And try to approach this, you know, from the very basics of why custody, you know, matters in that world. And I think you have to really kind of look at it from the perspective of what options are available, right, to miners or to really anybody out there as they kind of get interested in Bitcoin. And there's really kind of two major avenues that people take, right? And it's really the custodial journey, right? You know, and you know, putting your Bitcoin at an exchange for easy liquidation, and you know, the ability to kind of sell and you know, cover your operating expenses, or you know, like you said, self-custody, right? Which is, you know, the people who are a little bit further down the rabbit hole, who have, you know, maybe lived through a couple of the bad times in Bitcoin's history, who are, you know, realize that the age-old mantra industry of not your keys, not your coins is really truth, and that you can really kind of get burned. But, you know, really on the custodial side of things, you know, I think, you know, a lot of these generations or newer Bitcoiners or newer miners or stuff like that maybe haven't been around for some of the stuff that's happened in the past. But, you know, back in 2022, you know, a lot of people who were, you know, custodying their coins with some of the major providers who, you know, at the time seemed like they were foolproof, bulletproof, you know, weren't going anywhere, you know, that the Celsiuses, BlockFis, FTXs of the world, you know, you end up realizing in the downturn, right, that a lot of these companies have actually, you know, taken the Bitcoin that you've given to them, and then the yield that they're offering to you is you're actually the X liquidity, right? And
that happened to me. I had a lot of capital in Voyager, and you know, it was nice getting all the rewards and all of that stuff. And I remember when BlockFi went down, and I kind of thought about it. I'm like, but you know how it is. We all have different points in the Bitcoin discovery journey where you're like, self-custody, not your keys, not your coins. Like, come on, that's, you know, no big institution is going to go down until it does. And you lose a lot of money, and you lose a lot of Bitcoin, and you kind of like, wow, I need to restart. This sucks. So that's a very, very important point. And I think one that's easy to just kind of glaze over is like, whatever, you know, like if I put my money in Coinbase, it's not gonna, you know, it's not going to go anywhere until they put a freeze on it, or a fund hold or something. Anybody who owns a business that's done payment processing understands, that's done volume, knows what a fund hold is like and how stressful that is for operations.
Yeah. And that's exactly the point, right? Is that, you know, in the time periods where, you know, business is good and everything seems to be going well, you know, it doesn't really matter in the convenience of accessing custodial accounts. I mean, you know, granted, right, you know, the traditional financial system and kind of the models that are derived from them are extremely convenient. And that's really their allure and their attractiveness. And, you know, all of that is, you know, hunky dory and great whenever things are going well. But, you know, as we've seen in, you know, Keynesian economists, Keynesian economy, you know, the ball always rolls back hill eventually. Right. And we're, you know, kind of in a situation right now. I mean, if you look back at the previous, you know, kind of booms and bust cycles, right, you know, 2001 investor, funds were withdrawals were halted, right? And in 2008, same thing. Investor funds were halted, and and kind of right now we're experiencing a similar experience, right? With Blue Owl and Blackstone and kind of private credit restricting withdrawals, and this has happened in Bitcoin before, and it's certainly I would say the reason, from going back to that kind of first principles approach, why Bitcoin exists in the first place, right? I mean, if you look at the first timestamp that was included in the first block, the chancellor on the bailout or brink of bailouts for banks, right? And so really, people who use custodial accounts, I certainly don't, denigrate them or look down on them. I understand the convenience, but, the underlying facet of why Bitcoin is valuable in the first place is because it's a trustless asset, and you don't have to trust someone with your Bitcoin. You can take control of it. And so I think everyone should take self-control of their Bitcoin, whether you do that on a self-custody, on your own, or with, a partner like Unchained. But, there are some disadvantages, I would say, to the primary way that people go about taking self-custody, which is independently most of the time, right? So single signature, or, if you're a little bit more technical or more advanced, multi-signature amongst, kind of your party or your business. But what I think a lot of people realize in those situations is, you've omitted yourself from the counterparty risk of the exchange or the fund, but at the same time, you've transferred a lot of that risk onto yourself, right? And at the same time, you've also removed yourself from a lot of the advantages of the custodial system as well, right? The convenience, the access to the trading, the access to auditability and stuff like that. And so I think you end up realizing that, this is not a long-term solution either, right? And I think, this is particularly evident with individuals when you start thinking about inheritance, right? I think a lot of Bitcoiners are kind of alone in their families, and hopefully that trend is.
Isn't that the truth?
I know, right? I know. And
you can orange pill your kids. That's the best you can do, really. Everybody else looks at you like you're stupid and crazy until Bitcoin has a big bull run, and then you look like a genius, and then everybody starts asking about it. But then when it goes down, they're like, "See, I told you," and you're like, "Just wait."
I know. Well, they in the time periods where Bitcoin does well, right? Everyone tells you you're lucky, and whenever Bitcoin goes down, they say, "I see, I told you so." And so it's just, it is what it is, right? And that's the trend I think we're all familiar with. We're all used to being kind of the tinfoil hat at the Thanksgiving dinners or the Good Fridays, Easter gatherings, right? But yeah, in particular, I think the concern really manifests for the individual, and in terms of the inheritance perspective, right? It's like, okay, I've done all this work, I see where this trend is heading, but the people around me that I'm doing and securing this future proof of work for, right, aren't as interested in actually receiving that proof of work. And so how do I try to maintain or try to find a seamless way to actually get, Bitcoin in their hands? And so I think oftentimes, a lot of us Bitcoiners are in self-custody, they start, saying, "Oh, here's a cipher, right? Here's a passphrase, here's my keys buried underneath a tree out back," and, all that's hunky-dory, but, Bitcoin functions a lot like gold, right? It's a bearer asset. And if you do all this work, if granddaddy, accumulates a whole bunch of gold and then buries it in the backyard underneath the tree, and then they can't find it, even if you pass legal title, I mean, a lot of good it does for you. And so I think that's really where, one aspect of individuals it manifests. And then I would also say is, kind of prior to that, the unpredictable events, right? The worries about kind of, I mean, we were just talking right before we hopped on the show today, kind of the stuff that's going on at your house with the fire, the flood or the water getting into your house. And, people don't think about, right? If you're securing your seed phrase on a piece of paper and, you have a window open and it gets wet, right? And you can't read the words. I mean, Bitcoin's gone, right? It's actually gone. And everyone's heard about the story of the guy who's digging in the landfill, looking for $700 million of Bitcoin or whatever figure it turns into in each bull run. And, I think last time he was trying to crowd raise money, right, to buy the landfill so he could dig in for the hard drive. And, it's just, trying to avoid that stuff, right? That's just an area where you don't have to live. And I think actually, as I would say for people who are risk averse, right, it actually kind of turns them off away from Bitcoin, right? Like, oh God, I'm going to be a dummy. I'm going to make a mistake and that's going to cause me to lose my funds. And so you kind of, oftentimes either stick with the custodial or you end up in the, the self-custody with a lot of the advantages and a lot of the risks. And so, yeah, it's an interesting place. And I would also say, this kind of extends as well, building on that thought for miners, for businesses, for, institutions. particularly on the self-custody manner, and worries about collusion, right? And you guys are running operations. Oftentimes it's small operations, could be larger operations as well. But if you're kind of building out or trusting an individual stakeholder or someone on your team with access to the Bitcoin, you'd like to say we trust those people, but what's to stop them from betraying you or kind of
how many embezzlement cases are there every year? I mean, one of my clients in a different industry in a business was just telling me how they got ripped out of hundreds of thousands of dollars by their finance manager. And it was just heartbreaking because you feel bad for them. So, I mean, again, business partners steal from business partners, like crazy stuff happens. So it's a very important thing to think about. No one thinks about it until it happens, unfortunately.
Yeah. Yeah, I agree. And kind of beyond just I would say the immediate risks, right, of getting your Bitcoin stolen or losing it or not being able to pass it on to your family. There's also just the limits of self-custody as well, and what we were talking about, the lack of the custodial convenience of it's hard to audit, right? It's really hard to think about it from a perspective of operational efficiency, right? How am I kind of managing all the key stakeholders in my business and allowing them to have access and insight and, have the information that they need in order to do, fulfill their job functions, even if they're not necessarily the technical individuals who are holding the keys. Right. And so it's really hard to marry those two worlds together, and kind of the basic tools that are available in the market and most places. And so, yeah, that's really what, we try to solve there.
So how is Unchained's model different then? And again, from a Bitcoin miner's perspective, explain how, the current paradigms and stress of self-custody become a little bit easier through Unchained.
Yeah. And that's, that's why we're here, right? I would say Unchained is different because we don't ask you to give up that sovereignty, right? On one aspect. So on the custodial aspect, you're asked to give up, full control of the Bitcoin to access the convenience of those features. And with Unchained, we'll never ask you to do that. And then on the same side, within single signature, the worries about, inheritance, worries about, losing keys and things like that, right? Our model is intended to kind of give you no single points of failure, right? It's fully redundant in that, if you utilize it correctly, right, it protects you from a lot of the worries of collusion, of unpredictable events and things like that. And really, I would say the foundation of how that is multi-sig, but multi-sig with a little bit of twist that we call collaborative custody, right? Which is essentially, multi-sig is great, multiple keys. And for those out there that aren't familiar with multi-sig, multi-sig, multi-signature, single sig, single signature. It just really all it means is multiple keys and kind of structuring it how you want to. And I think a lot of people do this independently where they have, their own multi-sig setups, but collaborative custody is different in that you partner with an institution, right? To really kind of have your back and kind of help you in these situations that might arise. And so Unchained in particular, we focus on a 2 of 3 model, which is, pretty popular. I think a lot of people out there are relatively familiar with it. But, if you aren't, right, the idea is that Unchained holds 1 key and our clients hold 2 keys. There are 3 keys in total, and any 2 keys are actually necessary to access the Bitcoin. And so if we pull back that onion and kind of like, look a little bit deeper there, you can see some immediate discrepancies between, the custodial model and that. Since 2 keys are necessary to access the Bitcoin and our clients hold 2 keys, they have full unilateral access to the Bitcoin 24/7, right? This is actually Bitcoin that's within their control. Unchained can't stick our hand in the proverbial cookie jar and, try to access it or, control it independently. But at the same time, right, we also have some flexibility and versatility in being able to assist you in some of the previous situations I mentioned, right? So if you have 2 keys and you do have a fire, or you do have a flood, or say one of your sites catches up in flame or something like that, and you lose access to one of these keys, right? Unchained has that extra key in reserve that we can help you recover the assets, right? And so we, truly function as a kind of a new age financial, company, but transitioning away from kind of the old bad stuff in the traditional financial economy, which is, the absence of control. We want to actually be a partner for you as opposed to, being a babysitter is the way I would phrase it. And so really, from there, from that model, the underlying model of the 2 of 3, where our clients hold 2 keys and Unchained holds 1, we then enable you to kind of structure that in a legal perspective, bringing back some of the convenience into the, the system, right? That you can, title the Bitcoin to your individual. You could title it in an IRA, where you could hold the keys on your own. And then, obviously, on the business side, right, you can custody the Bitcoin to the business, titled to it. And on the same side, on the inheritance side, with trust structures, right? So you've got business, IRA, personal, and trust. And so that allows you the flexibility to kind of, make sure that you have the title to match your estate or the structure of the organization. And then we kind of take that, a little bit further by allowing you to kind of, build software layers on top of that, right? So we have something called like an approver quorum, which I think is going to be particularly interesting to the firms out there, the miners who are thinking about their businesses, because we build a software layer on top of the 2 of 3 model, right? So it's kind of like another quorum on top of the original, mechanism. So I guess what I would phrase that is if you've got 2 people who want to hold keys on your team, who are technical, who are involved in kind of the day-to-day operations, but you've also got a CPA, and you've also got, a financial advisor, or you've got a treasurer or something like that, who is not technical, who has, a lot of traditional financial experience, but is not familiar with Bitcoin. Well, then you can, put a signing layer on top of that, where if they, if they need insight, right, the 2 key holders can sign the transaction, and then it goes and pings, the other stakeholders involved in the organization, so they can come and review and approve or deny the transactions as well. And so it kind of gives you the flexibility to have the redundancy and the security, but also at the same time have everybody in your organization involved and focused, and be able to make decisions as a group.
So to me, what I'm interpreting that is, it's like scalable layers of security on your self-custody, and it de-risks it and makes things more efficient, but at the same time, more secure, with less risk of error and, less risk, which I think is obviously fantastic, because as you scale a mining operation, or, just your own Bitcoin holdings from an individual side, these are things you definitely need to be thinking about. So, one quick question I have on that is, are there any other ways that collaborative custody would work, like on a day-to-day basis here for small miners? Like, how would that integrate?
Yeah. And so, and I think this goes back into, kind of the intro of this conversation, right? Is like, what are miners really focused on, right? And that, custody oftentimes, being the large CapEx, the large operating expenses, the worries about financing and kind of day-to-day operations. And financing those operations, right? That's really, custody often comes as an afterthought. But, in reality, I think, partnering with a collaborative custody partner such as Unchained or others out there, right, gives you flexibility, because we can build financial services on top of that, right? So the same objectives that you're trying to achieve through your single signature custody, holding the keys on your own, or through your custodial account, where you have convenience to access a lot of these features, you can do this at the same time while having the advantages of collaborative custody. Because, Unchained in particular, we have a trading desk, right, that works to and from this cold storage model. And it allows you to one, receive your payouts from your pools, right, directly into your vault for your organization. And then, if you're needing to liquidate, right, you can send it to the trading desk to liquidate, get the cash, and then, you're off and running, covering the expenses that you need to. And I would also say, other concerns for, maybe larger organizations or kind of those mid-sized ones is about, paying out, partners, right? Limited partners, LPs. How am I getting, their investments out? And so we kind of make that easy for you, in that, your partners can have vaults as well, right? And from your kind of your base structure for your organization, for the operation, you can do, spins out into all of your client vaults, and, be able to, have them kind of have a white glove service, redundant model where they can receive their payouts, and just kind of centralize, all of your operations around a support team who's willing, able to take a lot of the burden off of, your team and operating, the actual custody for your clients, right? So
question on that particularly. So what does that look like? So say I'm running at an industrial scale here, and I've got, a team of people. Is it like a thing where we would call Unchained, we would explain how our organization is set up, you guys would build a custom plan for us, and then we'd be like, we want to layer our custody like this, we want to layer, our operational access, and then we want to have these, partner payouts that are scheduled like this. And, that's what I'm sorry, I'm trying to think how to phrase the question is. So basically, I'm assuming you guys would have like some sort of collaboration where you build a custom plan and structure around like a corporation or a group of people.
Yeah, absolutely. Yeah. So in particular, we have, a business signature offering, which is, I would say, like a kind of a white glove offering, but, you could accomplish the same offering without signature, but, we're able to, provide you basically a custom quorum, right? So, 2 of 3 is kind of our base model, but, if your organization requires kind of a more redundant or more robust quorum, 3 of 5, 4 of 6, or something like that, we're happy to help you build that. But also more than that, we're also help you strategize on what actually makes sense for your organization, right? Should I focus more on the actual underlying aspects of the custody itself, of the keys, building a larger quorum, or should I focus more on, the software layer, right? Because I have more stakeholders who are not technical, who are, shouldn't be involved in kind of the day-to-day operations, and give them insight through that, what we call that approver quorum, which is, to include the other stakeholders. But also beyond that to, being able to onboard your partners, right? Who aren't involved in kind of the day-to-day operations, who are just receiving payouts, right? Well, you have this kind of centralized source where you're able to receive all of your payouts into your business organization's vault. And then you could say, construct a transaction from the 2 of 3 model, send those funds to the approver quorum, so your broader organization can approve it and review and make sure that they have insight. And then those payouts go into the vaults that you have at Unchained for your partners, right? And so, you have this kind of self-recursive loop here where you're able to kind of centralize everything in one place. And we pair that, really, I think the value in doing that, because I think a lot of miners are questioning, what's different about that than what I'm doing right now in my self-custody, is that, you have a team here, right? Who is able to, want to answer questions for your partners, technical questions or trading questions, or provide support in a variety of different ways, from a first principles approach. So that's, I think, really the value is that, you can outsource, right, a lot of the worries of your partners and other things to us, and be sure that they're going to receive kind of that white glove experience. So it's kind of a way to take your investing experience to invest in your organization to the next level for the people who want to.
Yeah, that's really amazing, because it's like essentially you have a bunch of custody experts and financial services experts on your team that you can plug into, meet your individual needs as a miner for your organization and your goals, and can work with you to create the best strategy and the best layout and operational flow for your capital and structure it. So that's really awesome. So what other financial services do you guys offer?
Yeah. Well, I'd be remiss if I didn't mention, the Bitcoin-backed loans, right? Which is where Unchained started out, right? It's going back to our roots there, and really, I guess a little bit of tidbit of history there is that the way that the 2 of 3 model, the multi-sig model for independent custody, for all these different other titling ways, for the individual, for the personal accounts, the trust accounts, the IRA accounts, business accounts, that all derived from the initial collateral model for the loans, because Bitcoin is a valuable asset. And we look forward, with that low time preference approach to just where Bitcoin is heading. And so, in a lot of loan services out there right now, you have custodial accounts, right, where you're depositing the Bitcoin into the account. And then once it goes into the account, you have a number on the screen, but you have actual no way of transparency, of auditability of where that Bitcoin actually is. And so that goes back to kind of the concerns with, the FTX and the Celsius and the BlockFis, what's happening on the back end there. And so Unchained, our goal in that efforts of transparency is to provide a model where you can actually see where the collateral is and be sure, that Bitcoin is coming back to you at the end of the term of your loan. When we accomplish that through multi-sig, right? Through basically a tri-party, collateral model where the borrower holds a key, Unchained holds a key, and then an independent key agent, in this case, Fortis Bank, which is a state chartered bank in Colorado, would hold the third key. And so no one organization has unilateral control over the Bitcoin. So, they can't just decide to immediately take it. But then also beyond that, you as the borrower having that key on chain, you can do an independent audit, through the Bitcoin network to make sure that Bitcoin is actually there, right? And, we pair that and marry it with, a bankruptcy remote model, and, the underlying title of the Bitcoin remains with the borrower, which all sounds like kind of like table stakes things that you would expect that most organizations do, but that's not the case, right? When you dive into the the legalese and the documents, right? No rehypothecation is actually a truly rare model, because most, think about this from the perspective of a financier, of a lender, who's providing liquidity for loans, right? They want the Bitcoin in their control, right? Because if the market starts to make a downturn, they can immediately liquidate the Bitcoin and recoup their losses, right? And so, Unchained has had this kind of, a little bit of I would say, uphill battle, and and we're getting, a very good spot, with liquidity providers now, because, in the beginning they were like, why would we do this when we could just take the Bitcoin? And now that we've, got, what is it now? Almost 10 years underneath our belt, we've issued over $1 billion in Bitcoin-backed loans with zero loan losses. We now have liquidity providers looking at us going, okay, this is a really great model, and one that, can definitely provide a niche, and a value for those who are focused on Bitcoin as a valuable asset into the future. And so I would, if you value Bitcoin and where it's headed, right, our model is entirely constructed around that.
That's really fascinating. And I've always wondered about that, because being a maxi, at some point you're like, okay, I'm going to need to live in a fiat system, unfortunately. And to all of our dread, but you're sitting there like, dude, in 20 years, when the price of Bitcoin is way higher than it is right now, those of us who have been diligent and just been accumulating, there's some point where you're like, all right, I don't want to work anymore. I don't want to, I want to just take all my chips off the table. How am I going to live? I don't want to sell my Bitcoin. I want to pass it on to my generation. So how do I borrow against it safely without that third part, that counterparty risk where somebody can just be like, mine, or the bank can go down. And, I've always been terrified about that step, but my brain has always been like, well, when I get to that point, I will cross that bridge and figure that out. So the fact that you guys have already put so much thought into how to bridge that gap and come up with the way to actually do it, that makes me feel better, because at least now I know there's one option, even though I might be personally 20 years out. Everybody else is different and has a different timeline. So if you want to peel back the onion a little bit, I think this is a good topic. And I know we have other stuff here we want to cover, but since we're talking about Bitcoin-backed loans, do you want to maybe explain the structure of how that works a little bit deeper? So say, as a miner, we've come in, we've got, I don't know, pick a number of Bitcoin, and we're like, okay, we're good. None of us want to work anymore. We're done. Let's borrow against it and let's go live our lives. What does that look like? What are the risks, et cetera?
Yeah. So I would say, obviously the risks, the most immediate risk, right, with almost any of these, tools in the market now for lending is liquidation, right? Bitcoin is a volatile asset, right? In the past year, we've pulled back 40%. And people kind of look at that and they go,
only 40?
Oh, only 40, right? Yeah. That's a good year for Bitcoin, right? In a down year for sure. For some of us old heads who have been around for some pretty testy times.
40% bigger opportunity.
Exactly, right. Peak financial opportunity. But yeah, liquidation risk is the major concern, right? And so Unchained, really what our focus is we do have a higher collateralization level, right? Right now we operate at I would say a 250% collateral to principal or a 40% LTV. We use collateral to principal. So if you were
how that works for those of us who aren't finance.
Yeah, exactly.
Collateral to principal. What would that mean?
Yep. So if I had, say I wanted to take out, $100,000 in a principal amount of a loan, right? Then, at minimum with Unchained right now operating, and excuse me, I was a little bit wrong there. It's 200% collateral to principal. So if I wanted to take out $100,000 in principal amount, I would need to post $200,000 in Bitcoin collateral. And so that gives you, some leeway, right, in a downturn, that to weather that volatility, right? We put you at a little bit higher up there. A lot of us go, well, I'm not getting as much value to access my Bitcoin right now and kind of scale my operations. But our focus is about what happens, when Bitcoin does what it's done, in the past 6 months, right? Which is take that downturn, because, and a lot of people out there, if you end up, posting the Bitcoin for collateral for the loan, and then you have a big downturn, right? And then your collateral is seized, right? Well, now you have no Bitcoin, right? Which is kind of the initial part, the value or the long-term treasury of your company. And so our focus is actually collateralizing you just a little bit higher, right? Which, I think is counterintuitive to a lot of people, especially if you're considering, just focused on, specific numbers day to day. But yeah, what we've seen is that a lot of the clients who take out, loans with some of those higher LTVs, 60 to 70 to 80%, right, depending on which model you're in or what company you're with. As soon as you have a downturn, that Bitcoin is seized and you lose all the upside. So you might as well have just taken out an uncollateralized loan, right, and not had to worry about it. So that's really, if you're going to use the tool, the goal is to use it intelligently and smartly. And I find that, in particular, as Bitcoin now is being pushed, Bitcoin mining in particular is being pushed in a lot of ways to I would say the fringes in some areas, right? As AI compute comes on and, becomes more valuable for on-grid mining services. You're seeing a lot of people, particularly and where I work in Texas, right? Out in the Permian Basin who are oil and gas guys, right? And their primary focus is about tapping wells and getting into the wells themselves. And they have, methane or natural gas on top of it, right, that they need to flare off that, due to regulatory restrictions, they can't flare off. And so, they're kind of, out of luck, right? There's no infrastructure in West Texas to ship the gas out. And so what you end up doing is, a lot of these people are now, pairing with Bitcoin miners, selling the gas to a miner, right? Having the miner itself, make the Bitcoin, you get the gas off the well, and then they can access and tap the well itself. But along the way, right, you're also able to sell that gas generally for a higher market rate than what you're able to sell it for, just the broader market in, say, like East Texas. And when you sell that for a little bit higher price, it gives you some flexibility to carve that off into a treasury. And when you carve that off into a treasury, you can then subsequently use that treasury for Bitcoin-backed loans to scale your operations. And your primary focus was, on the oil itself in the well in the first place. Bitcoin's kind of a byproduct, right? And so, it's what I would say is a de-risking, and particularly in some of those stranded or natural gas flaring areas with Bitcoin, back lending, because traditional financing in those models, is kind of betting on the future revenue production of the well itself, right? I go take financing because I'm going to be able to, sell this gas in the future, and if you have operational issues as you're trying to tap that, right? Well, then you end up with no gas to sell, and then you lose the well, and then you're underwater on the financing. Whereas with a Bitcoin-backed loan, if you're carving off into a treasury, the Bitcoin takes a downturn, you lose the Bitcoin. Well, that wasn't your primary concern in the first place, right? And so there's lots of different ways to approach it. That's just a very specific example, and my experience with stranded energy. But that's really, I would say, the value of Unchained is, the ability to kind of help you think through a lot of these strategies, especially with some of our sister companies as well.
That's fantastic, because we actually do a lot of stranded energy stuff. The last MasterMINED webinar, we had a gentleman on, Brian Nielsen, who has made this incredible system of calculators. And if you haven't watched it as a MasterMINED viewer, definitely go back. I think it's mcftools.net, I believe, is the URL. Don't quote me, that might be wrong, but we've got all these calculators here at Bitcoin Mining World that allow you to basically enter all of your specs for a potential opportunity on a site and calculate, should you, go for the gas, should you mine Bitcoin, should you do, et cetera. So it's really, really fantastic, the level of tools and calculators and things like that. So that's excited to hear that you actually have a lending component that's dialed in to that market, because that's a market that Bitcoin Mining World services a lot and has been putting a lot of energy and thought into. Okay, so you've got a lot of really awesome services that I think are going to be really powerful for Bitcoin miners. So how does Unchained scale with larger operations?
Yeah, that's a great question, and I think from the point that we've been talking about with the underlying collaborative custody model, that I think that's great. The trading desk, Bitcoin-backed loans, kind of all the services you kind of think about on a day-to-day basis as a miner. But the question then becomes, with a larger organization, how is this scaling from a legal perspective, right? For some of the larger investment opportunities, for transparency and auditability and all this other stuff. And so that's where, just about a year and a half ago, we spun up a company called Gannett Trust, which is a Wyoming trust company. And really, I guess the focus there is, providing kind of the institutional level, custody, qualified custody, being able to, marry kind of the infrastructure of collaborative custody from Unchained alongside the auditability and scalability for larger organizations. And so, with qualified custody, I think you get some, pretty unique advantages, I would say, in that, we have the ability to do what we call delegated models, where you're able to, utilize Unchained as a key holder, which is, standard in our kind of basic offering, but also utilize, say Gannett Trust, the trust company itself, as another key holder. And then you could, as the final key holder, be a part of the quorum as well. So you have transparency, you maintain the same transparency into, the Bitcoin and it being held. But at the same time, you're only holding one of 3 keys where 2 keys are necessary. So if that key is lost or stolen or something happens, right, you've got, Unchained and institutional and Gannett, as those institutional key agents to really help you, recover the Bitcoin, right? So you kind of absolve yourself from a lot of that risk from the day-to-day type of stuff. And I really think that kind of gives you, really advantages and, the ability to really audit the holdings, right? Because, qualified custody offering with collaborative custody, which still gives you kind of the transparency, is really the first one out there. No one else is doing this. I mean, there's lots of companies out there that do qualified custody, like, BitGo, Fireblocks and things like that. But, we do it with a particular blend of marrying, right, the pillars of Unchained, low time preference and Bitcoin as a common purpose, and that, this is valuable for you. And so you should have authenticity and transparency into it. So we call that our partner model, where our partners, hold one key, and then Gannett and Unchained holds another key. But beyond that too, I would say the kind of legal structures that you're able to create once you have that qualified custody designation is much more, scalable, right? This is something that you bring to an institutional financier, and that's one of the first questions they ask you, right? Is how are you going to, kind of guarantee qualified custody, and particularly for funds and for large miners and things like that, because that's just what they're used to. And so you have the ability to kind of marry both approaches.
That's fascinating. So what about personal trust administration? Do you guys deal with that at all?
Yes. Yeah. So we do. And thank you for reminding me about that. Yeah. Unchained, we do, institutions on the institutional side, right? But also on the individual side, right? So, from an operator's perspective, if you're living on a Bitcoin standard, running a Bitcoin company, it's just really convenient to have kind of both of them together, right? And so Gannett, in particular, I think is valuable for those trust structures for, some of those more advanced estates, or for people who are, particularly interested in, kind of maintaining their wishes into the future, right? Which is really, I would say, the advantages of trust structures, beyond all the tax and all that stuff that I would say I'm not qualified to speak to. But, really, Bitcoiner is one of our major concerns. Even if you do have an inherited solution to get the Bitcoin to them, they're just going to sell it right away, right? I
told my kids that if they sell my Bitcoin when they inherit it, I said I will rise from the grave and I will haunt them for the rest of their lives.
Right. And that's a very scary threat. And I certainly wouldn't want.
It's not a threat. It's a promise. I said, rule number 1, kiddo, you don't sell your dad's Bitcoin, which will be yours. I will find you. Yeah. I will haunt you. Like, you can sell anything you want. You sell the Bitcoin anyways. I don't want to get off.
No. I mean, you're scaring me over here, man, and I'm not
very intimidating.
My girlfriend in the other room probably, knows the same thing. Right. But beyond that, right. Legally enforce it. Right. Like with your trust structure, use Unchained, use Gannett Trust as the personal trust administrator to carry out those wishes. Right. Where you can give them access, in the same, legal structure that you want to, and allow Unchained to, help adhere to the wishes into the future, right? Until such time that, you build into your succession pathways that they kind of grow up to be able to manage it on themselves. But you have a partner in that regard, right? Not only a partner, has the operational capabilities, to execute, but also the philosophical understanding of the value of Bitcoin, right? Which I think is what gives a lot of comfort to people out there who are, trying to accomplish similar things with, traditional financial professionals who just, for lack of a better term, just don't care.
It's so frustrating. And I really resonate with that because I give you an example. Part of my estate plan is that I have some life insurance structured things called a LIRP, or a life insurance retirement plan, that it's very common for people that own businesses. And I remember going to my advisor like a year and a half ago when I really hit my peak Bitcoin maxi. And I said, hey, I'm really concerned about this plan you sold me. When we sold this, my initial thought was the only loophole in this is inflation could outgrow performance of a thing that can only, is built to average like 7% a year. And I said to him, I'm like, is there a Bitcoin option in this? Is there like any way, or if that ever comes, I need to know because I want to take more risk in my policy. And I'm like, how can we beat a 7% rate of debasement? And he says with a cold face, he's like, well, these plans are just structured. I'm like, you didn't answer the question. How are we going to beat 7%? And he just repeated, like, it broke his brain. And then I'm like, I need a new advisor. This is terrifying. My guy's a moron. No offense to him, but, and I don't want to be rude, but that really, but when you tell me about that, that really resonates because again, having just done my own, or I should say updating my own estate plan and having multiple children, I think about like my wife doesn't understand Bitcoin. And boy, that's terrifying because she would probably sell it immediately and do something stupid like pay off the house. Like really, you know what I mean?
You're not a Bitcoiner listening to that. We sound crazy.
So I think about like, so I love the idea that you're right. You could structure into your trust a set of rules that says, hey, children or spouse, you can do anything you want with our assets. You cannot sell the Bitcoin. And this is the structure of how that's going to work. So I like that you guys could potentially be a partner to help advise in a situation like that and handle it correctly from a Bitcoin perspective, because I feel like most financial advisors, most estate attorneys and et cetera are not thinking about this because they're not Bitcoin maxis. And like to them, we're some fringe group of people who are crazy. So that's really, really important. Yep. So maybe break that down a little bit, maybe talk about like the trustee side of it.
Yeah. So I would say, in particular, I guess, people who come to Gannett, or just kind of ask about it, have questions because, generally, someone who's interested in a trust company has some elements of relationships to, previous trust structures or things like that. And so I would say the beauty of Gannett is, you can use this as a directed trustee or an administrative trustee, which, essentially means that we handle the operational kind of day-to-day, aspects of Bitcoin management, from a technical perspective and from a financial perspective. But, we're also subject to, kind of the wishes of your external advisors, right? And so, you kind of marry the two together, right? Gannett is able to handle the Bitcoin portion in particular, and you can use, traditional financial where they work best and your other assets, and you don't have to kind of, full bore switch over entirely, right? You can use us kind of as an ad hoc basis for what makes sense in your particular portfolio. So there's just lots of flexibility here, right? And that's really kind of the goal, going back to Unchained as a foundation, is that, we want to be the one-stop shop, right? We want to have, kind of an offering for, big and small all the way up, but with the same, flexibility as traditional finance, with a foundation of you having control over the assets, right? There's, we've spoken a lot about, Gannett Trust in particular, which I think is, about kind of the trust structures. But at the same time, there's another arm of that business as well, which I think is also sorely lacking in traditional finance, which is just RIAs, right? Registered investment advisors. Most people think about, like to your point, what you were just talking about, 7% interest rate, how are we going to beat that inflation rate and stuff like that? Well, they have no clue about how Bitcoin functions or kind of the philosophies of which you structure your investment lens into the market. And so we have Gannett Wealth Advisors, which is, I would say, kind of to bridge that gap. Right. Whereas they're an SEC registered advisor, they hold all the qualifications as a traditional financial advisor. They can work in the traditional financial world, but they also know all of the latest Bitcoin products, right, and trends, right? Stretch and Strike and Stride, and everything that's going out with just all the stuff in the market now that is more and more available for to achieve kind of financial goals, but with a Bitcoin focus. And so that's, I think, pretty valuable. I would say beyond that, which is in the minds of a lot of people that I talk to day to day, is kind of Bitcoin holders who have been around since 2017, 2016, and stuff like that. And at the time when they were investing in Bitcoin, it was kind of a moonshot for them, but then it rapidly turned into a very valuable investment. And so they're I would say kind of newly into that world of having a significant amount of assets under their control, and they're not exactly sure what they should do or how they should structure things. And if you go to a traditional estate attorney or to an investment advisor, as he was mentioning, they have no idea what they're talking about. But that's where the value comes in for I would say also the inheritance planning with Gannett Wealth Advisors, as well as you have a very unique asset that has a lot of unique properties, and how do you plan about inheritance in that vein for the future? And so that's an easy, immediate kind of gap filler, I would say, that's kind of missing in the market.
All right. Well, that is really, really fascinating. It's super impressive what you guys have put together. And I'm actually very excited to see how the company evolves over like the next 10 to 20 years and, all the other needs that will be met in the market. So I guess my final thought here, and by the way, if anybody has questions, drop them in the chat here and we will answer them. But I think my final thoughts and my takeaway here is you guys are like really a one-stop shop for miners, that's no matter what the scale is, because I mine at a small scale with some hosted mining, and I'm just like, I need this in my life because again, there's just so many problems with once you go down the custody rabbit hole and you start thinking about, okay, well, what happens if something happens to me? What happens to my family? What happens to my business and the practices? Like, I can't, like, who's going to run my Bitcoin mining operation? Like trying to explain this to my wife, it's terrifying for me to think about that. My best hope is my 10-year-old son, but he's got years before he's able to make big boy decisions. So I think to myself, like, wow, having at least some type of structure and so a partner involved that can help you mitigate that is going to make you sleep way better at night. So I like that you're a one-stop shop for both large and small miners, and being able to incorporate custody and financial services without counterparty risk and without sacrificing the TradFi advantages. Because as much as we like to beat up on TradFi, there are a lot of things that it does provide, safety, structure, risk avoidance and stuff like that. So my next question here is somebody is asking, how can they get started with you guys if they're interested and they want to link up their Bitcoin mining operation? Like, what do they do?
Yeah. So, I think that the first step that we always kind of recommend is a complimentary consultation with our team. You go to the website, unchained.com. One of the big buttons there is, the ability to, just book a consultation right off the bat and get connected with our team. And, what we're going to do is sit down and just have a conversation with you, like, what are your objectives? What is the way your organization is structured? And just kind of level set with each other from the get-go to make sure that, we understand what your needs are and then kind of go from there. So you can go to, unchained.com. In particular, we have a nice affiliate link here that you can use to schedule a consultation, and I'd be happy to talk with you and see how we can help.
That's unchained.com/BMW. And if you are interested in setting up a vault with them, you get 10% off your first vault. The code is BMW10, and I just popped that in the chat, but I will also have this updated in the descriptions for this. So we got a special little affiliate code here for anybody that's on the MasterMINED series. So with that said, we're going to head out. But before we do that, again, I just wanted to mention that we do have 60 new ant boxes that we are getting rid of here and selling. This is a fantastic opportunity for anybody in the market looking to scale while Bitcoin is down and we're in this bear market. So hit up JR Rockefeller, smash the QR code, and he can get you dialed in if that is something that you're interested in looking at. So Matt, I want to thank you so much for coming on to here today and sharing so much valuable information and showing miners and of all sizes of operations better ways to come, I should say better solutions to some of the problems that we have to deal with every day. If you want to check out Unchained, it's unchained.com. And again, if you go /BMW, that we have a little affiliate coupon code at BMW10. So Matt, thank you for coming on. Anything final you'd like to add?
No, yeah, I mean, just thank you for having me. It was a pleasure to talk to the Bitcoin mining world. And happy Good Friday, guys. Go enjoy the weekend.
Thank you, everybody, for watching MasterMind.
Thank you for joining us in the MasterMIND Club, your ultimate gateway into the world of Bitcoin mining. Whether you're just starting out or looking to scale your operations, our vibrant community of like-minded enthusiasts is here to support you every step of the way. Join us next week where you'll exchange ideas, brainstorm strategies, and stay motivated on your mining journey. Thank you for joining us, and tune in next week.